Okay, so I'm just playing around with the classic RSI, and I have closing prices on a 5-minute chart, and I've got the cloud that I built like a 5-layer cloud. Closing prices are in black, range small, on top of just this wackadoodle thing. What I did notice is that very dramatic dojis. Not a lot of them. Very dramatic. Like this inverted hammer here, but it's really not. It's an inverted Akanashi cloud because the close is actually up here. And I could go to the candlesticks, I suppose. Right? So here's candlestick bodies. There's the line chart. And this is the default. So you can see the hash marks, but if I just go to here, I can hide the candle bodies. So when you see a big move like this, you don't necessarily have to have this red and green, because I think we can get your brain around the fact that that is fat and it's up. It's fat and it's down. Where it opened really doesn't matter, because you have to imagine this is a big bearish candle, even though it opened there, but according to this chart, I guess I'm hiding. The problem is I'm hiding the top of that in the cloud, so it actually opened up a little bit higher. So that's a little deceiving there. When you're cloud trading like this, all this is a histogram moving average. And it's just a nice, easy, low-frequency trend trading system. Also with the RSI, you can see the divergence. You can see the positive reversals. It's time frame dependent. If you go to the 5-minute chart, you see this lovely reversal coming into the Asian session. And I think the move's over. Boom. Right? We got 15 minutes to top of the hour. So 15-minute chart just updated. Boom. There's no reversal on this chart, but look at the 5-minute. Beautiful 3-period reversal. You're looking to count 2 to 5 candles. So does this qualify? Candle 0 is here. 0, 1, 2, 3. This is a 3-period positive reversal. 3 to 5 are the most wicked moves because the market isn't doji. It's hesitating. It is reverse momentum, more oversold, higher price. That's all there is to it. Divergence causes the reversal. Failed divergence right here. Straight up, easy to see. RSI is built on closing price. Boom. Target is set by the difference. So you're going to take this line and you find the highest close and you extend here. This should be your target. It's your measured price pulse move. Even Hannah knows about these. Hannah Forex talks about price pulses. Now, this is the detour into the setup. Breakout traders have buy stops. Market order people are waiting for RSI to get below here. Pull the trigger like a sniper. You've almost got a top become a bottom. So everything's setting up for the spring load. And you get a big burst. In 10 minutes, you made X. Now, the spread is pretty brutal here. This is the Dow Jones. 50 pips, whatever that is. Like, it doesn't look that bad, actually. Anyways, I wrote this without any kind of price grid. I don't know how much this trade's worth, but maybe it's not even worth trading. But here the spread's about EA. So maybe it's the spread's right here like this now. And that's probably pretty wide for Asia. I put a buy limit here. Maybe you're out of the trade by now. It's definitely overbought. But, look, it just keeps going. Ledger profits run, which I do think this is the time we're going to see the stampede into the bottom of the month. So This is my 30-day same as cash theory of life. The quarterly taxes are coming in, and we're coming into the end of the fiscal year. How much money did the government take out of circulation? And the wheels are going to come off. Stocks are going into all-time highs, and they'll say it's because Trump, the Mueller report is a big piece of shit, and that the market's been in doji mode, in decision mode. This will be the argument that fundamentals will throw at you. If anything have that, oh yeah, well, can't you see the whole fucking stock market was all cautious to the upside because the Mueller report's out now. Everything's okay. So there goes the stock market. And look at the monthly with my special multi-layered cloud. She's going back to green mode. Safe to get in water, people. The funny thing about these goober fucking cloud traders, of course, my cloud's fucking tight. It's 4-period cloud. It's just a moving average. But how can you fuck this up? Now, granted, I was saying in the other video, once it turns blue, you just can't sell. It's in the context of the last thing that happened. Not to mention the volatility is going to matter a whole lot. I wish I got a yearly chart here. Look at the daily. We've almost got a reversal on the RSI. Positive reversal. We've got a double bottom. And we're coming up against the fact that we have not moved more than, actually, yeah, okay, so I guess I should put the line chart back up so I can see the wicks that I made. See, my wick should be on, the last thing on the indicator list should be bar. Let me make sure I did this cloud right. I think I might have fucked it up. The last indicator needs to be bar. And I put a 4-pixel bar in this. Like, this really is a true price here. It was in midair back there. Oh yeah, because this other color is a cloud that I have that's 4 wide. So I'm mistaking that. You gotta be careful with these layers. I've got like I start with a 4-period moving average, then go to a 3-period moving average with the same method. So the method is the first number and the third number. That is the method. And I'm trying to stack it so we get to a point at which it's just a 2-period, but this needs to be maybe different sizes, because I put this in the stack and it should probably come, you could pull these in and out all day long, honestly, and it would look so bizarre. You'd have to actually either go to one moving average, or you don't mind having a spectacular looking insanity chart. It's really going to depend who you are. Unfortunately, I could trade this system, this Goober-esque system, but I'd still place orders based on what I know is probably going to really happen. I mean, what's going to happen as far as the fallout of a move. That it may be a clean break and it may not. The market may explode in either direction. And if you have stuff that you can do about that, like you're either going to try to grab it at the edges, or you're going to get in before it explodes to the edge. You're either going to ride it to the edge of your so-called reversal point. That's the only good thing I could say about Fibonacci. At least people are thinking out there instead of right at the market. So I guess this is why people say it works, right? Because what you're really doing in essence is saying, I'll get 62% away from here. I'll get 38% away from it. As soon as you do that, now you have levels you can go to, right? And with a good ratio and the right amount of trading, you'd make money. I think it's that most people want to make money because they're saying, oh, can't you see we're going there? And then we're going to go here first, and then we're going to go there, and then we're going to go here first. You should see Jana Forex. She's got 4 zigzags and then a big fucking move. It's so cute. Everybody has their scenario what's going to happen. But typically, the market will move X, and it's got to take some kind of breath. Well, how big is the breath? And when is this happening? Are you able to trade the breath, or can you only trade the filling of the breath? So the market fills up, then it exhales. Well, there's a pivot point. Where the pendulum is. Before it swings the other way, it's essentially stopped, and then we come the other way. And how are you going to? So if you're going to use a ruler of momentum, what you're trying to do is find out, like in a wind tunnel, when you run, fog, you want to see the path of the wind. Obviously, the more streamlined, the better, but you're trying to gauge the apex of the momentum, because the market can only move so fast. The market can move in an instant, but how do you read that on a gauge, right? If your gauges didn't have some type of softening, you wouldn't see it. It would just flicker, and you wouldn't. So sometimes they'll have plasma meters that a little hang time to them, right? When you're recording music, it hits a peak, and maybe it has a soft kill, because if you don't get a chance to stare at the fucking meter all day, you want to see that thing. Oh, look, it's called peak and hold. So you'd see a light at the top stay. One increment stays, but meanwhile, the rest of the meter is telling you what the real-time current situation is. But you've got like a peg, you've hit a limit, and you've pegged it. And it's left a mark in the sand. I mean, this is what happens when the markets peak. They hit a number, turn around. Well, that's fucking written in stone to the future. That top tick Tommy auction theory, there's people that buy right at the breakout. I mean, on a weekly. Okay, there is people making that does break out and pull back maybe and then take off, and people say, well, why wouldn't you get in there? But if that doesn't happen, there's this drilled in aha moment that's happening on the 30-second chart or the tick chart, and you just go, oh boy, that's over. And there could be news or not news at this point too. Don't forget, the market can just tip into a window and there's nothing there. There's no there, so it comes back, and then it's like, holy fuck, there's way more there on the other side of that thing. And it doesn't matter whether you think that that's possible or not, because the market doesn't think. It doesn't know you exist. So it's like kind of like if, say, the world came to an end and shit started to act up, like your walls started to melt without being hot, what would you do about it? So I guess you have to prepare for that stuff, right? You have to say, well, what would you do if all of a sudden, well, you have to have a backup plan, right? So that's maybe you trade with stops, so you don't have a lot of money in the account. If you're going to experiment with weird shit, you're either going to have $400 in the account, or you're going to have fucking, maybe you have $1,000 in the account, but you're running stops. And maybe you're getting, once you realize that you can't run a 4-pip stop all day because you're so fucking cheap, you're going to have to run a 50-pip stop, a 100-pip stop, a 25. That's going to be the first thing, is how much you're risking per trade and what market are you trading. If you trade the euro dollar, you run a 100-pip stop and maybe survive through the day or through 8 hours. But it depends what's going on. If all of a sudden the Europeans decided to, do something financially, maybe people would give a fuck. But the way it is now, it's like the United States and the United Europes, it's a stable currency spread. It's tight. There's a lot of liquidity there because people are trading in the midstream. That's the mainstream. That's how it is. Then on the outskirts of town, you got stuff like just wacky shit. I mean, right down to some fucking trash Bitcoin. Or penny stocks, for God's sakes. But that's what fucking Microsoft was. I mean, this is the stock dream. Pick some fucking, I mean, who couldn't, you know? Or start your own fucking company. But then some people have destroyed that landscape. Think of Enron. I mean, you just can't, you know, the regulation that comes in because some dumb shit decides to sell something that doesn't exist. But then I say, fucking buyer beware. If you're dumb enough to buy it, well, fuck it. Let Darwin kick in for you. If you can drive into a fucking wall, you know. But anyways, back to this trading shit. Okay, so momentum-wise, sure, you couldn't live from necessarily momentum only, because you kind of have some view of like, oh, gee, what do I do about this? And what about that? And what happens? Well, I know you probably could if you had this indicator and you just kept going for the best time frame on the dailies and weeklies and admitted that you're only going to trade. There's only like one trade a week on a 4-hour chart, maybe 2 trades a week on a 4-hour chart that are worth trading. So you would only have 2 trades a week on a 4-hour chart if you're going to trade at this cloud, because the fucking cloud's got a 4 period or a 3 period or 2 period moving average, or RSI's got a, you know, so you have to realize there's really not a lot to do. On 1-hour chart, that's a whole fucking different world. I mean, a 15-minute chart, you'd be, okay, fucking missed that entry. I mean, you're about 45 minutes from missing the best fucking trade you probably see in the next 18 hours or 12 hours. This is a whole different lifestyle. You're hunting for fucking trades every 6 hours. A 4-hour chart, 1-hour charts, you got maybe 2 computer screens. It's so boring. You die. You got to have something to do. If you're going to trade like that, you're not scalping, because you're not going to sit there and look at the 5-minute chart and look at the tick chart. You get your finger on the trigger. I suppose it depends how you want to live. This is the thing I don't think people ever accept, is that there's 2 different worlds. You're sitting there trading really big to make a few pips, or you're trading really, really small to make 1,000,000 pips. And then you got to fit that box in fucking what you can financially handle for being winning and losing. And making it okay to just blow money. Like you fucking buy a car, you think it's making it. The moment you buy a car, people spend like 30 grand on a car. I'm like, what are you doing? Like 30 grand? Every moment you drive it, it's worth less. And it's falling apart. At least your trading account's fucking making money. I don't get it why people are so fucking freaked out about losing money trading, or just spending money just the moment you get it. Come on. Just to get your money's locked up. Not only you paying commissions and spread, you can't use that money to go get some more hookers. It's sitting in your trading account. Look at the setup on this fucking weekly cloud on this goddamn U.S. stock market. Let's go through the fucking roof. Hold on, people. Inflation's coming. Brace yourself. Oh, it's going to be like the Roaring 20s. There's no recession coming. It's hyperinflation. It's the Roaring 20s. It's only a 100-year anniversary. I can't believe people aren't even talking about this. Where's all my X22 report? It's so funny because I guess YouTube got my number one day. They're like, "You like watching that?" I kind of just. I'm just amazed how people are calling for the end of the fucking world every 2 seconds. Clickbait motherfuckers out there making more money than me. They're getting views up the ass. Look at this top become a double bottom on the weekly. I should have a fatter moving average line there. We got confirming RSI. We've got a fucking cloud is just about to, this is like the little baby pullback, but maybe it's the end. Maybe it's going to fall in this hole. And then I'd say, ruh-roh. The report came and they said, you know what? There was nothing on the Mueller report, but it turns Putin Putin's queer and so is Trump. They were both on the same site. Not together. Oh, God. Can you only imagine? So we still got this hole. And this has been stacking up. And we got this one. And the Dow Jones that goes way back. It's pretty profound. But look at this cloud just nailed this thing the whole way up. Better than Renko. Don't ever use Renko. If you can, Renko's bullshit because it's like this. It's not a real price. What Renko leaves behind in a trail, if you had a trailing stop, I just watched the No Nonsense Forex guy talk about Renko. And on the screen, there's a big fucking range. But all the bricks behind are all smooth bullshit. This is not a fucking real chart. Well, that's where your trailing stops at. It fucking has nothing to do with its time is eliminated. What's the fucking point? Wow, wait for another brick in the wall. Yeah, you gotta listen to fucking what? Pink Floyd while you fucking chart that shit? At least the cloud traders are dealing with reality, even though they do run a moving average in front of the market or behind it. Now, that's all whack. This is not cloud trading, people. Even though I'm calling it, it's my version of the cloud. It's smooth Akanashi cloud. But I like it to look colorful. As long as you're pretty colors, I can trade it. I do think there's something to be said for being a complete fucking imbecile and using this cloud trading. Got 5 minutes after the top of the hour. If I had a yearly chart, this thing would be pure fucking green, I can tell you right now. I know my cloud. Look at this thing's been in a bull market for how long? The fucking Dow Jones since 2008. Since 2008. It's inherently bullish. Look at this thing, man. Look at this thing. Perfect touch here on the trend line. Close only. Only draw your channels and stuff on close. Look, we have perfect top out right in the middle of the pitchfork here on the closing prices. Dow Jones. Thank you very much. Thank you for coming. Then we hold down the control key while we hold to this node here. And we drag that over and make ourselves a pitchfork out of that. Oh, we kind of overshot it, see. That's what I say. Draw an envelope. Give yourself a wick window like this from close to wick. I think that's secure. Don't be so precise. Relax. Make your pitchfork like this. Now it looks more Fibonacci. See, this is why people say the golden ratio. Because look at the all you're saying with the golden ratio is that stuff has the zigzags get smaller and they get larger. You can have one of these expanding tops, you can have all this shit, but in the end, what's really going on, and don't forget, there is a channel within the channel, too. Because if you believe in channels, there's baby channels here, right? I mean, for somebody on the planet, this is the monthly Dow Jones, for God's sake. For somebody, this is a fucking channel that came to an end temporarily. Also, we can see the signals from RSI here, 3-period RSI. We see divergence at the end of this channel on the monthly. I'm just going to go through this. I mean, I'm sure people know this stuff, and some people are probably heard all these things before. I'm just going to show you that we've all seen these in the books, these setups, you know. Here's your divergence. And people sell here, and they're like, what the fuck? And you almost have a reversal back to here where it's more reversal, but not quite. But considering how this is so stretched up, but the question will always be, how would you make money from that? Did you sell this for 2 months on a pullback and squeak a little bit of money out of that? Or did you just say, forget RSI? I'm just going to, let me get rid of this all these things here. Let me start over. Oh fuck, that's supposed to delete that. Oh wait a second. Let's just say that all you did was buy down days or down months in the green cloud. This whole time it's going up without regard to RSI. And so you just you had to trust and believe, okay, this is down into the green, and if I put a slower, like a 5-period moving average, I probably wouldn't even shift color. It'd probably stay green longer. But then it wouldn't be as dynamic. But I bought here, and then I bought here, and I bought here. I didn't buy any of these up bars. I bought here, I bought here, and I bought here. I literally didn't chase it. I bought here in the cloud, 4-period, bought there, bought there. Okay, now I'm getting clobbered if I buy here and here. Right now I start to get crushed. So, and at what point, maybe I give back 30% of my account getting trapped in this brutality of volatility that all of a sudden appears on the horizon there. I mean, after this is 2 years of the most beautiful fucking trend you've ever seen in the Dow Jones, bar none. And of course, here you could make the argument that volatility is dried up. You've got severe divergence here for the first time, and this reversal is supposed to be a buy. I'm not gonna be able to draw all the way down there, but this is so here's your reversal that failed. But the other thing is this is long-legged reversal, because if this is 0, this is 1, 2, 3, 4, 5, 6. It's outside the 5-period. 5-period reversal. Man, look at this reversal here. So you've got this is huge. It's so long-legged, but see, it's too far out there. So when it does make money, it just collapses so hard because it's overextended in that the doji factor is gone. This is almost a reversal here. It's very oversold, but not quite a higher price. But it really is kind of like that. The reversal. If I was on a 2-period RSI, it would show up. So during this year, and I think this is going into brand new prices that's never been before. Also here, we're going into brand new prices. Historical. So people in 2015 are freaking out. And they just clipped those wicks. So here comes the market makers, gobble that up. Not really divergence here, but almost. If this closed down a little bit lower, this would have definitely been divergence. And then we have our first insane reversal right there. Right off of this giant top become a bottom pivot. So this is all happening, and for the algorithm that has the 4-period, it says only buy. Like if you're a real trend trader, this is your filter. Okay, if you're a trend trader, you have to sell this. If you're a blind trend trader, hopefully you have a monthly chart, a yearly chart. Because this here obviously was a buy, at least to here, to scalp, and so is this. Any pullback, I could extend that cloud out. You could go for, I wouldn't go past, honestly, I wouldn't go past the 8-period moving average, because then what the fuck's the point? I mean, don't forget it's a monthly chart. Like the weekly chart is going to be like very dramatic. Like here's your end. So in the weekly, plenty of RSI entries here on the weekly. So it's not, there's a low noise chart, the weekly. Very oversold, higher price. Here's a steep one right here. So this is 0, 1, 2, 3, 4, 4-period reversal. Then here's one. That's a long-legged one. And then it gets to this reversal becomes a problem because it's not 2 to 5 period. It's way out there, and then it just topples. And here is a reversal. More oversold, a little bit higher price. We got a top become a bottom, and holy shit, brand new highs, unbelievable. And this is the toppling. And this was the big fat stop hunt. Bam, 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 clear them all the way out. Come all the way back to this top where everything started. Unbelievable. Rip straight up for like 8 weeks up. Incredible. Look, here's a nice divergence in RSI. So, weekly RSI. Here's reversals. More oversold. Price is higher. So divergence causes the pullback. The momentum dies harder than the price. And it keeps marching. Top become a bottom. But the volatility is just getting insane. Like if we can cut out to the north here, it'll be a big leap. And then we could all be trapped up there too. So it's going to be so exciting coming into the end of the new year. Staring down the bears. The bears are scared shitless up in here. They're just going to fucking have to buy everything back. And that means that this double bottom, we've just got a hint of divergence there. That's got to hold. Oh boy. So yeah, it's crazy. Here's another version of this cloud. But I'm going to put the new one up I just made. This one's called... Let's see if I saved it. I guess not. Yeah, that's... I was just using that one on... here's just a good old-fashioned black and white. Now, I understand this chart, and I actually have stochastics on this one. But I'm more inclined to go to the 1 hour chart and say, okay, well, what's going on here, you know? Okay, it's tanking. So do I want to start buying here? Probably. I'd say my buy limits are going to start here. And then I'll put more buy limits in here that lasts longer. I'll put more in here that lasts longer. And that'd be as simple as that. And the 4 hour chart makes sense. So I just put that on and go to sleep, honestly. I just wouldn't even bother trying to... I'd put a ton of orders here because that's... Every time I see a wick, I see a ton of orders. So there'll be more orders here. So if a pocket of orders there... I know this is a 50 pip, the 50 pip line here, so I got pocket of orders there. And hopefully in the next 4 hours it'll start getting filled. So I wanted to fill them up and just take on those tickets. All I did here was zoom out, which changed the look of it dramatically. I think this is another one I was working on. It's fun. I mean, now this is the one, okay, it's a big bar on top of the cloud. So the current price is the important thing. And the problem with these colors is that you really do want to trend trade it. Because otherwise, when you're looking at just a really stark clean, super clean, like this. It really talks to me about volatility, just good old raw volatility, weekly volatility here, and daily volatility, and what's likely to happen. And this gives you more mental flexibility to say, well, you know, you could come down here. You're not so attached to the trend. With the colors on there in the RSI, there's more tendency to want things to unfold a certain way, where this really super naked trading is a little more, you can still do trend lines on this, which is the same thing as RSI in the end, really. So if I go like this, that's on an angle on close, and if this starts to puncture that, it's like a reversal in a way if it doesn't get above this. So here's your bottom become a top on the daily. And this trend line is probably a bad color. It's hard to see. I really can't see this color very well here. And you could make this, you could copy this over. And you making channels is the same thing. You know, you got this, just looking for a place to have a entry, really. I'm always thinking about the range on this thing. So it looks like we just nicked the top of yesterday by like about 1 pip here coming into Asia. And for the people that are looking at the stop hunt here, I think they're underwater on this one. They bought into this new low. And this is the contention. The guy that bought this stop, is he going to hold that? Is that a good trade? It looks like the scalpers are about to jump out at that window. And somebody put a big fat ticket down here, I'm sure of that. And they just made X. So that's a gimme trade. This is like when you break balls and they end up right near the pocket. Now, no fill here. Doesn't mean we can't go down there. So you're either going to be the guy that's buying these, and you just put a pile of tickets in there, or you're going to be the guy that's going to sell the top of this day for some kind of pullback, and the top of this day for some kind of pullback. And then after that gets filled, you're going to naturally want to cash out and buy it back down here in the future. So if you're doing scenarios, then you're kind of building these landing zones, I think, more than you try to build this, put the shelves in here before. We don't know how it's going to get there. It's like a bouncing ball. So I'm thinking, let's put some places it could bounce off of in the future. So this is the contention. We have to get above that. I'm sure people would be bailing here. No surprise it was a bounce into this. Somebody scalped that. Somebody probably took since it closed up here, we know that it has been to here and back, so somebody made money on that. As long as their stop, or they bought this whole region here, right? So they really loaded up here. So this would be the really hot spot to buy, because you're getting this low that you haven't seen in a while, and you're getting this one. And since it closed up here before it went smashing down again, if you trade it big enough on here, your spread is under 1 pip, and I think commissions are like 0.4 of a pip. You're probably cashing out of that right now. Now, if you go to the 4-hour chart, you're going to have to zoom out a little bit. It's a whole different world. So now you can see this 4-hour game, which you couldn't see on the daily. You could have bought a retest down here 3 times based on this low. So there's a world within a world in a world. You could have bought this area 3 times. You could have bought that first one just because you had a ticket down there. And then you could have cashed out, bought again, cashed out, bought again. Or you loaded up heavy and put your stop too tight in and you got stopped out. Anybody that was long here has probably cashed out because we all know there's sellers on this top. There's sellers on this top that haven't gotten tripped yet. And that's probably, oh no, it looks like they did get trapped up there. So you stretch the scale, you see right here. If you had a sell limit here, and that's why you can put your sell limit on there and you know that you got filled. Unless your stop was so tight. But see, most people can't. They're not going to see that. There's an 8-hour top. They fill it. They kill it. There's the breakout traders on the 4-hour. They go long. They run their trailing stop. And this is what adds to the fuel on the downside is there's a trailing stop running here from the bulls. They trail it. And then they get stopped out, which causes selling. Super narrow range. Here comes the low risk people that trade really big, and that's why you'll see you see this thing heat up on the downside. Another small bar. Big deal. Trap on one side, but huge down. Now all the breakout traders step aside for the next 12 hours. There's no way that the guy that trades a certain size is going to change his formula. I wouldn't think he would. And start putting a sell stop here, a buy stop here, and risking that much on the same size ticket. And once you cut into this window, it really gets out of control. But for the people that are buying at the market below this price, they would have bought here, and then they would have bought here. They would have bought here. They wouldn't have bought the next bar because it's not down, and then they would have bought this inverted hammer, and then they wouldn't touch it. And maybe they bought here. So if you're buying at the market, it's a completely different trade than if you're getting filled on limits down here. But if you do both, if you didn't have to sleep, and you could do these trades, if you wanted to sleep and not babysit the market, obviously, when the market's here and it goes to here, what do you need to do is start putting orders here to buy. And you can put an order here, and that order is now break even. But you had an order here, and you have an order here. Now, people aren't going to like it if they're trading 10Ks or 100Ks or 300Ks on each line here, but the only ticket that's currently underwater is this one from buying a new low, and you just have to wait. In fact, you could have got out here with a small loss. 18 hours ago, you could have got out here. So when it's making a triple bottom, the range traders are cleaning up down here. Stellar yen. There's a field day going on here. So inside here on the 1-hour chart, your head would come unwrapped here, because now you're going to wait 2 hours for a low value. Like, see here on this 1 hour, you'd be like, okay, Actually, a robot could have won on this one. 2 hours sideways, low volatility. Then bang out. I'm sure there's divergence here. So it's double bottom. So now you've got 4 bottoms here. You've just got the wicks there because you can see the... Here you probably want to compress that a little bit, but you don't want to get too carried away. So we could see stuff like... All the time we see stuff like this. So this triple bottom. Or these head and shoulders pop out really easy on a line chart. So here's your shoulder. There's your shoulder, head, shoulder. For the wick person, they're looking at shoulder, head, shoulder. That's why after this close, you could still go lower and fill this thing. So it really depends on how you see the market. If you could see this as a stop hunt or a fill, backfill, and right here on this 1 hour rooftop, sellers came in, big pullback. Now you want to put your buy limits here and put your buy limits on these holes. And maybe you're flat, waiting to get filled here. But it's not, okay, almost about the hour. You just got to take the risk. I don't know what to tell you. You just got to be, okay, this is a lot of work, a lot of risk. Here's the infamous guppy. And the carnival colors aside, once again, in this 50 pip window, we keep bobbing into this 50 pip window and not going anywhere. Are you prepared to make money that way? Once again, you dip into this 50 pip window and it doesn't, just keeps falling back. $50 pips back and forth. Accumulation or redistribution? Look at this thing. What a fucking mess. It's not worth it to me. Unless you're going to limit trade this, I don't know. I'd like to see people, I would like to hear how people are trading that with a moving average. I just don't think you could. You have a better chance on this one. Australian dollar. Because that's a monthly chart. Looks very smooth. Looks like it's a buy, actually. How many currencies are you going to trade? Here, let me put up this template. Got closing prices on it. I kind of need the closing prices. I'm addicted to seeing the line chart. The structure of it all. Looks like we get cut up. Still ranging. Sellers are going to come in right there, I'm sure. Obviously here. And they've already scalped it off of this thing. Daily chart. 4-hour chart's completely different story. In this instance, you want to be the guy that buys that wick. Now you're up on all those tickets. And you're going to be underwater, man. You're just gonna, it's just how it's, look at it. I mean, you got to buy that. There's just no way around it. These are all the prime deep discounts, and then you got enough dry powder to buy here if need be. That's all I can tell you. You just got to buy low, sell high. I mean, in fact, you got to be willing to sell up here if you want to sell, because that's where the sellers are. It's pretty stupid in the end. And of course, the seller's up here. But yeah, you should be able to go through these things. No big deal. New Zealand's on fire. Look at the weekly. New Zealand's going to lead the Australian dollar into this thing. Easily. Wow. Things on a tear. Oil's back to its insanity. Oil's rearing up for another rally. We got almost a perfect pullback to the structure here. We stop under the goobers. We made it to above the 60-yard line. Now it looks like we're we're staring down $62 a barrel. My target eventually for crude oil is going to be another $5 to $64 a barrel. And then that'll be it for a while. It's going to have a fuck of a time getting above that, but it's on its way. As stocks go through the roof, and pound CAD last time I looked at was just going to hell. But I think it's done going to hell. Looks like pound's just about to slow down tanking. But yeah, you gotta look at all this. I don't trade that shit. Dollar index is interesting. Looks like the dollar index could start melting down. That would be natural. The petrodollar. Dude, there's no such thing. People guys say, well, it's petrodollar. Well, don't you understand? We're not on the gold standard. Yeah, you've been on a gold standard. The time you weren't on a gold standard when it was fixed at 35. That's their version of a gold standard. Now we're on a real gold standard. We're on a reality standard. Things are priced at what they're priced at. Anybody buying Boeing Airlines? Boeing's coming back. I told you, buy this motherfucker. It's 50. I know it's not a fib handle, but it's 50% off. Look at this thing come back. It's technical analysis is pretty slick. We don't care about fucking planes blowing up. Besides, it was tanking before. You notice it was tanking before the plane blew up. It was already on its way down. That's because the insiders knew the plane was going to blow up. Did you know what's going on, son? Broke that trend line before the fucking plane blew up. Look how the gap opened. Boy, we filled that gap. Gaps do fill. I think Boeing's fucking right. It turns out it was just a bad fuse. You know that's what they're going to say. Look at the fucking top become a bottom of the monthly of Boeing. I have very little data. But it's all I need is that big monthly pullback. That's how we roll here. We're using this special scientific method called common sense. ExxonMobil's about to rip north. Everything's going up. Wow, look at this thing. Amex looks like it's going to take a little breath. But yeah, can the DAX make it above the threshold? They're all going nuts, man. Look at the Hang Seng. The whole world's bullish. We're all going to hell. It's the roaring 20s, I'm telling you. Look at careful, people. Wow, look at this. Look at this moment here, man. We just that's very unique. 2008. Wow. Look at the punishment this thing took. If you put this alongside this looks like a range trade compared to our market is like in a trend. This thing, good Lord. Man, this is brutal. No wonder these people are hardcore. Look at here's our stock market. Here's our tech market. And look at the Hankanese. Holy shit. A little choppy. Kind of choppy over there. What were people thinking here? Look, it just took out new highs. Yeah. Wow, look at this thing. NASDAQ's just leading the pack. Oh my God. This thing's going like 10,000. Looks like Bitcoin on a tear. So we dipped in the window here in the monthly. Looks like everybody's had their scalping fun. It's time to fucking get on the bull train, people. They're going to rip your nuts off. Look at this weekly. The bears are going to get their heads handed to them on the stock market. Here we go, people. We're launching in the wild blue yonder of 32 5,000 on the S&P. There's got to be a fib handle up here somewheres. Come here, you. Let me show you. You talk about my fib. I'll give you fib. Look at this. I can make the argument. I'll do the Tony Plummer projection. He's going up here, son. 5,000 on Dow. Fibonacci says so. Yeah. That's a no-brainer. Herm don't need no brains for these trades. All right, so yeah, that's my view. I'm sticking to it.